That's going to be funny because then I've been doing this whole video and there's been no audio. Alright. So, according to the output, there is audio. There wasn't before, there is now. Okay. Oh dear. But, because I updated the software, and I thought it would just carry the settings across, and it obviously hasn't done that. Hi Michael, good to see you in the group, and I apologize. That actually means I've literally spent 20-30 minutes talking about this. I'm going to see if I can edit the video, and I'll just kind of come back into where the audio is. So that's okay, because I can recap very quickly, so it's fine. That's just going to have to be what it is. That's just, wow, definitely not enough coffee this morning. All right, so I'm just, man, I feel like a fool. Okay, so here we go. I need to repeat this last part because I think this is the most important thing. So I'm going to go to the NASDAQ here, have a look at this on a monthly, and let's recap. So I'm just going to pretend that I'm going to start from scratch here. Okay, so first of all, what I was talking about is this price action is, to me, significant. That's a real attempt and failure, and attempt and a failure, and it's quite significant. So to me, there's no divergence here. So what that usually means that this is normal, as in this is price is a bit tired, wants to come back for a retracement, and technically the trend is still intact. A shallow retracement, meaning that if there are lots of buyers here, if the market is still inherently bullish, and this is just a normal breathing out, breathing in, it's probably going to find support around 12,000 and then potentially carry on from there. Right, now we know we've got lots of stimulus coming out, plenty of that. So the US government is also a buyer of the markets. So they also put money into the markets. So there's a lot of support at any rate from the US government. And if that's the case, it's also potentially likely we'll get stimulus in other countries. The point being is that there should be cash going around. And so it would be unusual, logically, that the markets struggle because a lot of that cash is still effectively out there. But we'll see how that unfolds. So a shallow retracement could mean price comes back to 12,000, find support, goes on a deeper one, a deeper correction is back down to 10,000 before continuing on. And it is either one of those, in my opinion, in the bigger picture, in the bigger scheme of things, is acceptable. The deeper correction is much better for the longer term, because every time we have a really big correction, it becomes a buying frenzy after a while. You know, it's a bit of depression on the way down, but it's a really good reset for the market. So we'll kind of see how that's going. Are we in a bubble? I mean, I think we could argue we are in a central bank bubble that is a kind of unlike anything we've done before, because QE and stimulus cash have basically gone through various policies and gone, have certainly in this particular case have gone through to the corporations as well as high net worth individuals, let's say the 5%, and they've been funneling it back into the markets. It hasn't really been trickling down per se. So, and that's why there's been this weird thing where you get a lot of, you get kind of, let's just look at employment figures. You get, kind of cutbacks happening, which shouldn't necessarily, and there have been cutbacks happening throughout this whole period. So there's a bit of a disconnect between so-called money in the markets and companies not necessarily expanding the way you would expect, with the exception of someone like Amazon that's obviously benefiting from quarantine. My point being is that there is a bit of a disconnect in the economics. There isn't, we haven't really had a lot of wealth going throughout the whole country or any of the big countries around the world on the way up. Certainly it seems to have gone mostly to the top, and so there are some gaps. So my point being is how rotten is the base? How much danger are we in of a big a big bubble bursting? At this point, it's a bit too soon to tell. I would say I would still be bullish on the markets. In principle, there's not enough evidence yet to indicate at all that there's going to be a change, and the change takes like 6 to 18 months anyway. Point being, should test either 12,000 or 10,000. So I'm still, and the NASDAQ is the one that is the most parabolic and the most overextended when I compare it to something like the Dow. The Dow is really not in the same kind of condition. It actually looks a little bit better. So my point being, I'm leaning towards being bullish for now. Okay, so in other words, it's not about being an idiot and pretending we're not due for a bigger correction. I think it just is potentially either safer to be cautious or to be cautiously bullish rather than to just go full on bearish. Okay, now, so those are what I mean is in principle I'd look at those. I also think it's really worthwhile to look at other markets, such as kind of make, go and see what's going on with some of the others. You can see again, look at that stalling on the price action on the ASX here. It's coming into the old highs, but that is just a sign of there not being enough buyers above that level. It doesn't mean it's gonna lead to a crash. It just means that at least it could lead to a consolidation or a retracement before carrying on, or third option, a bigger correction. Just observing that, looking at the Nikkei, that's looking, big move. It's had a beautiful breakout. At some point that would be nice to see that come back down to either to test this level or potentially pull back into the moving averages. So yeah, are we maybe are we in the next few weeks going to see the markets have a bit of a correction? That's possible. Not all of them are equally overextended. The S&P looks okay. What does the Ftse look like? Excuse me, the Ftse looks good. It's continuing to push a little bit higher. I'd love to see that push on to 7,500. The DAX looks good. It's only just broken through its level. So what could be happening here is we could start to see a bit of a disconnect between or uncoupling between different indices around the world, and just for a bit, and we could start to see that some of the ones that are a bit overextended start to correct a bit, and maybe we see some of the other ones that aren't in such a bad state continue to tread water or push higher. But so I think for me what falls onto my potential trade watch list for the day will be the ones that look the safest, rather than the DAX because I trade it every day, or the Ftse because I live in the UK, or the ASX because I live in Australia, for example. So it's a question of I think it's always a good idea to do it. Generally speaking, these move as a group. Okay, next up, let's have a look at things like Tesla. So let's have a quick look at Tesla. So Tesla has had a very nice correction. That's pretty cool. I'd like to see how it closes, because if it closes the way that it is now, although I could argue it's bullish because the buyers push back up, it's not bullish enough in my opinion. In a situation taking the entire story into account and looking at that, I think it indicates that if it closes this way, the next candle could be one of those ones that ends up coming back down. Once in a blue moon you see a candle like this that's followed by another candle that just disregards it, and that could be the case. Okay, so going back to the commodities, basically what I was going to say is gold is now at a key level that I have for it that shows it could turn around. Its 4-hour downtrend has been broken. So in other words, you can see here, this is a great example of price producing fresh lows down to a key level. Meanwhile, at the bottom over here, the MACD is diverging beautifully. So it's a fantastic example of bullish divergence. And what is wrong with me? I forgot to drop the link into my chat group. So, okay, and so we've broken the 4-hour downtrend, which means it's now a daily retracement. If I go look at this, make it a daily, we can see it's now coming back up into the moving averages. So what are the possibilities for gold here? Yes, it could continue down to 1550. I have it at 1550 as a possible level. Again, let's go look at this on a monthly basis. Back down to here is acceptable if you look really at the history of it. It's broken through this key level. Therefore, the next key, substantial sort of key level is 1600 to 1550, call it that. Down to about there. So it's possible that we could just head down to that level. But at the same time, when I kind of look at the weekly levels, this is enough of a nice correction on the monthly that therefore I think it's led off some of that buying pressure. And actually, if it decides to turn around here, that's perfectly acceptable. I've got that as a level on the weekly, and therefore it could do that. But in order for me to be convinced that it's going to do that, I'd like to see it get back over 1800, and ideally obviously it's got to break these highs to really convince that, but I'd like to see it do that. It could move up, break up 1800, come back down, test it for support, come back up, and then you've produced an uptrend and changed. So gold is one of those ones where it's a little bit tricky, but where it gets more interesting is, let me bring this back up. where it gets more interesting is, come on, where's my, there we go, is when you start to look at the other metals. They look a little bit more bearish than bullish. So they're struggling a bit with resistance here. We'll see how that goes. How is copper looking? Copper is, you know, toying with the idea of breaking and heading a bit lower. So if you look at it on the 4 hours, it looks a lot more bearish, like it's just holding at 4,000. Sorry, at 4.000, and then it's going to drop below that. So let's see. Platinum setting up with a bullish weekly candle, interesting, but on the daily, potentially a continuation south. So in a situation like this, where there is the possibility of price heading lower on one time frame, like the daily, or potentially heading higher on the weekly, what I have a couple of choices. I can just wait till the end of the week, just to see how that weekly candle closes out. And if it closes out bullishly, then I've probably got to set up to the upside. I also want to look at it on a monthly basis. On a monthly basis, bit of a rejection here. It's struggling definitely with that 1-2 level. So it might want to come down a little bit lower. So kind of taking that into account, I'm leaning a little bit more towards it perhaps heading a little bit lower. And so the ways in which I can do that is then to possibly watch the lower time frames, say the 4 hour. The 4 hour is a really good indication of where the daily is likely to go. It's very unusual that you can have an I don't even know if it's possible to have an uptrend on the 4 hour and a downtrend on the and not have that impact your daily setup. So that's what I mean. So here I'm kind of leaning more towards that daily possibly hitting a little bit lower for now. But if I'm not sure, if I'm uncertain and I don't want to make a commitment to that, then I can just leave it and check it on Friday. If it closes as a bullish weekly candle, then potentially it breaks the high next week, then it's to the upside. Right. So that's kind of it. Oils. So oils are now in an area where, in an area here, certainly on the daily, I was looking at light crude, where it could potentially produce a bullish candle today or tomorrow. This could be the setup. There's a little bit of bearish divergence on the MACD. So I'm just using the MACD instead of the MACD and the RSI, mainly because it's common for RSI to produce false signals. That's why I tend to use the MACD and the RSI together, so that when both of them are in agreement, that's pretty good. But the logic in that as well is that if I had to choose just one to give myself more screen real estate, the MACD would be the one, because it very rarely produces false signals. Now, it doesn't mean that I'm going to start to go, I'm going to completely cancel the idea. I'm saying price action wise, this is a good area for this to resume the uptrend and head higher. I'm just noting that there is some bearish divergence. So what does that mean in practical trading terms? It means that if I do get a bullish signal, or I still feel that there are some potential reasons to go long here, then I can reduce my risk if I still want to take the trade. And certainly for my trading journal, I want to comment and just say, look, there's a bit of bearish divergence there. Bearish divergence there means that maybe what could happen is that it tries to go up, fails, produces a lower high, and heads lower. So if I get a really good entry and a good stop loss, and I get to 1-to-1 and I take profits and I get it to break even, then I can help mitigate risk. So I guess what I'm saying here is that the more experienced trader might look at a trade setup and actually go, I can see where the potential weakness in the trade is, but I'm still going to take the trade. And the way in which, and then what they do then is, in order to mitigate their risk, they drop their initial risk, they take profit sooner, they make sure they move their stop loss as quickly as possible. So in other words, they manage the trade aggressively in order to make sure that if it is going to ultimately turn out to be a weaker trade setup, they've tried to get themselves to safety as quickly as possible. And that isn't always necessary with with your average trade, just with the ones where you are a little bit less convinced with, we're starting to see some signs of weakness. So it just means trading with caution. It certainly means that if I want to trade on the much lower time frame, that I, the 15 minutes or the 5 minutes, that I'm, 3-to-1. I think it's always a good idea to every trade you take using these kinds of strategies, that you say, okay, have your expectations be realistic. Say it's going to be a 2-to-1 or 3-to-1. That way, if you hit your 2-to-1 or 3-to-1, great. And if it goes 4-to-1, it's a bonus. Okay. So Oils have a potential swing setup. I'm a little bit bullish on the indices today. Cryptos, Bitcoin is bullish, Ethereum is bullish. So if I'm going to trade those, they're looking good. In terms of currencies, it was some of the yen pairs that looked quite interesting. There were a couple that looked okay. For the most part, they're not looking super well. And I started off the video when there was no audio talking about what's going on with the dollar index. But I think it's best we'll just talk about euro dollar for now. In the much, much bigger picture, dollar index is still within a range, and euro dollar potentially. So if I go to the monthly, it's still effectively within a range, and therefore until it gets out of the range, I have to treat it as though it can completely come back down to the bottom. I have to give it a 50-50. It really can. Right now it's trending up beautifully. If it produces a bullish candle here and breaks, and it breaks to the upside, it could actually be trying to work its way out of that range. On the other hand, if it ends up coming back down to these previous highs, then it's starting to look more like it's range bound. Because basically, you could, in hindsight, you could say, look, if it's bullish, it'll be bullish. It'll just do what it's supposed to do, and so therefore, it's giving us clues as it's going as to which way it's looking. And so really, what I'm going to be looking for is to see between this month and next month if we get a bullish monthly candle, if price stays above 1.2, and then if it is capable of breaking above, say, 1.26. All of that would mean a weakening US dollar. And I hope that happens, because when we get it moving, that's when we get some really, really good trends. And honestly, going back to 2015, 5 years, we've not had a lot of really great trends on the majors. Not a lot. I think we used to. In the past, prior to that, we used to get more trends. So that's my point. So it just means trading with caution. All of the major pairs, it means trading them with caution, because they're especially at a point right now where they could turn around, change direction, and head higher, or potentially try and fail and head lower, or head lower. They could do anything, and so there's a lot less uncertainty there. Before I wrap up, I'm going to have a look at some commodities. I'll go through the RJO futures. So let's have a look at these. And this is really for those of you who are looking at other commodities in a bit more detail. And I want to run through them and just see how they look. So actually what I'm going to do here is change my layout and just go to a monthly, weekly, daily and see how these are. I will try and do something like this every morning if I could just run through it. Okay, so corn, a bit overextended on the monthly and therefore possibly something to avoid for now. Soybeans, same thing again. Looks fantastic, but is definitely heading towards having a bigger correction at some point. It's starting to diverge a bit there. That's a mess. So wheat is a mess. Milk is possibly going to, milk is a pass. Feeder cattle's a mess. So I look at the daily, and I can just see here when I look at the last sort of 6 to 10 days, they're all pretty much in a range, which immediately tells me that it's bad on multiple time frames. Okay, let's go to this to 100 units and do that. Live cattle. Nope. Again, look at that daily chart. I mean, the monthly chart, a bigger problem, or any higher time frame chart where all the candles are just together like that. That's a mess. Okay, so that's a pass because there is no inherent trend. This is dollar index, which we've just spoken about, as to whether that is going to retrace and produce a rejection where it is and then head lower. So are we going to see it start to break out of its range, or is it now just going to start coming up higher and higher, and then are we back still within the range? And either one of those is equally valid as an idea. Euro. Okay, see the euro here is starting to head lower than it should, in my opinion. It's starting to look more weak, so weaker, and therefore I'm leaning towards there being possibly being a shift where that dollar strengthens. So I'm definitely going to keep that in mind. Let's look at JPY. JPY is moving down to those lows. Look at that. It's a flat level. I think that's potentially going to break through. Look at those. Both those indicators are nice and bearish. So retracements here are possible shorting opportunities. So ironically, sorry, just got some other messages. Cool. Okay. So I often say dollar yen is not worth trading, but actually it might end up. It looks like it might have its way there. Nothing on CAD. Let's go to crude. So crude I spoke about in this on the other layout. Natural gas. Look at that. Some good monthly trends there. Potentially hitting lower, so that's cool. RBOB looking really. I mean, that daily is just beautiful, but it still has a couple of days to come back down into these highs. This would be a really good point. 1.990 would be nice for it to produce a bullish candle, and that weekly could be starting a weekly retracement. So there's a lot here, and it's also broken through old resistance. So no, it actually might come back down and find a base and climb up higher. With coming in and having a look at that in a couple of days. Heating oil overextended, but also back into these lows here. So it's back into resistance, and it's a big move. So at this point, I think that's probably going to potentially head low. There's also bearish divergence, MACD and RSI. So implying, and a big round number, implying heating oil might just have hit its ceiling, and it's going to do a much bigger correction on the weekly. Okay, we've looked at these, the S&P. Overall, S&P weekly looks good. What happened there? Okay, overall, S&P looks good on the weekly. Monthly, a little bit overextended. The NASDAQ is the one, as I said. I still think we're either going to get a shallow retracement or a deeper retracement there. So some caution. The Dow, not that bad. It's not as bad as the rest. That coming back down. Lean hogs. Sorry, now we're just jumping through them randomly. Nothing there. Bonds. So bonds are interesting. Bonds are usually a very good clue if the market is historically. If the market is starting to get very shaky, the stock markets, bonds start to climb. It's generally a very reliable indicator because money just moves straight from stocks across to bonds. It's certainly due for a bit of a correction here. So if it is going to retrace here, that could be a hint again that the stocks are going to take a bit of a hit. But overall, it's interesting. It's coming back into these highs. I think if it's ever going to find support, this might be it. If it breaks down here, we might see it hit low. So, yeah, I mean, it's relatively bearish. My point here is, for now, these are an interesting one to look at. If you are concerned about the stock markets maybe taking a big dive, it would be interesting to see if bonds are starting to climb higher. But for now, they're still within a downtrend, which implies the markets are generally still bullish. But overextended. Again, overextended. Corrections would be nice to see across the board. Euro, dollar, tapering out. Sorry, this isn't super exciting. I know if this isn't super exciting. Copper. What were the other ones that everyone was looking at? 4-hour natural gas. Okay, cocoa. That's bullish, but a mess. Coffee. A mess here. Sugar. Weekly. The weekly looks interesting to me. It's in a good area here, so there could be a potential turnaround at that point. Cotton. Big correction there. Bit overextended at this point, so that might actually end up being better to short for the time being, even though because it's overextended. Orange juice, not much. Aussie dollar starting to fade a little bit here. Starting to, like, that's slightly high off a big number and starting to look a bit flat. So I think we could see that start to weaken a bit. Sterling looking okay. Sterling looks like it still wants to keep strengthening. That's interesting. And Swissy looks like that wants to hit lower. Crude oil. Oh, we spoke about that already. Heating oil. Okay, so there's a couple of things here and there, but overall not looking super exciting. So that was it. I just wanted to do a live stream, and I'll try and do the same thing again tomorrow. So ideally we can pick up from where we are today, and obviously now the settings are set, so the audio will work tomorrow. Again, apologies for that. I'll see if I can edit the video and make sure it's uploaded correctly. That's it, guys. I just wanted to do a live stream if I can do that in the mornings, and ideally it'll be 10 minutes or 15 minutes, not an hour. But yeah, thanks very much, and good to see some of you there. So I will make sure everything's working tomorrow. So thanks. I'm going to end the stream. All right.